Hi there, this is my presentation on ROI, return on investment in business, and why businesses use ROI. So let's have a look at what is return on investment. Here's a definition for you. It's a financial metric used to evaluate the profitability of an investment or compare the efficiency of different investments. It shows how much return or profit is generated relative to the cost of the investment. ROI is commonly expressed as a percentage, making it easier to compare various investments. So let's take a couple of examples. If a business was launching a marketing campaign, they may put some money into that and they'll get some money back from selling the items that they've been marketing, and hopefully the return on that is higher than the initial investment. Business might be looking to buy a fleet of vans to expand the company in one way or another. They would invest so much money on that, make some profit perhaps by investing in a fleet of vans, and hopefully get a better return than the actual investment itself. Same with perhaps a new factory. How much would a new factory create in terms of profit? That could also be an example of a return on investment, and also just buying in new business equipment and machinery and things like that. So just quickly summarize, a return on investment expects a higher return on the initial investment made by a business. So for example, investing in marketing campaigns, new vehicles, new factories and machinery, it is hoped that there is going to be a higher return. Sometimes there's a higher return, sometimes there's a lower return, but of course if you've invested wisely, then of course it will be a higher return. So why do businesses use return on investment, and why is it so important? Well, if you've got a business, you're probably going to want to make some kind of investments along the way to try and increase your profits. And so that is one of the reasons why it is important. It's also useful for decision making. Businesses use return of investment to determine whether a particular investment is actually worth pursuing or not. It's good for using it as a comparison tool. It allows for easier comparison between different investment options, helping businesses allocate resources more efficiently. And it's good for performance tracking. It helps business and investors track how well their money is being used to generate returns. A suitable A-level answer there. So do take notes of what I'm mentioning here. So now we know what return of investment actually is and why businesses use it. How is it actually calculated? Well, as always with the math side of things, it's a very simple calculation. Taking one number, dividing it by another, multiplying it by 100 to give you that percentage. So it goes the profit from the investment itself divided by the cost of the investment multiplied by 100 will give you the return on the investment. So for example, you could have a profit from an investment that created £25,000 worth of profit. The actual cost of the investment was 91,000. Multiply that by 100 and it will give you an answer of a 27% return on the investment. So ROI is quite a short topic, so we move straight now on to exam style questions on return of investment. Have a go at these. So explain 2 reasons why business might use ROI when deciding between 2 investment opportunities. 4 marker. 2 marker. ROI is described as a financial performance metric. What does this mean? Another 4 marker, explain 2 potential drawbacks of using ROI as a sole measure for evaluating investment opportunities. And the 9 marker, evaluate the usefulness of return of investment for a business when making strategic decisions about expansion. Consider other financial and non-financial factors that might also influence decision making. So there you go, there's some A-level style questions. Coming up next is the calculation questions, just for you to be able to have a go at. Okay, so next up is the calculation questions on ROI. You could have a go at these. These are pretty basic, 5 questions, just looking at the different types of ROI, and all answers should be as a percentage. I'll just read you question 1, and then once you've got the hang of that, you should be able to do the other 4 very simply and easily. So the scenario: a small UK bakery invests £8,000 in new baking equipment. As a result, their net profit increases by £2,400 over the year. Calculate the ROI for the new baking equipment. Like I say, if you were paying attention a bit earlier when I was going through the formula, you should be able to do that very, very simply, easily and quickly. And that's it. That's all we need to say on return on investment. Okay, thank you very much for watching this short video on return on investment. If you enjoyed the video, I've got others that are on the YouTube channel, so don't forget to like and subscribe, and there will be more videos coming out shortly.